I just the zoom of the camera, you know, I gotta like
I'll get
come
closer.
back here, you know.
So I'm just gonna share this, and then we'll get going here.
Cool.
This
I
always
will
takes a second.
find, yeah, I will find your tweet.
I think I can clip this part out once it's done streaming, so it doesn't matter how boring the beginning is. And let's see, is it streaming? And yes, it's streaming. Okay, I'm just gonna share it.
Cool.
We'll share this to Twitter, and people wanted to listen to this, so I'm gonna bang this out really
Um,
quick.
let's see. Can I have the guys at Levana retweet this? Let's see. I got all of these. Like,
Yeah.
I got like 15 different Twitter Spaces links. No, but this is great. I love the flexibility. I really appreciate that, and I really
Yeah,
appreciate.
I'm experimenting with different stuff just because it's just it's been a nightmare dealing with Twitter Spaces, like
Well, you know,
everything I'm
I
trying to
can jump
plan.
in with a quick update as to like where we're holding with Levana. Um, that's I don't know. You know, I mean, feel free to you know to give some guide rails or lead the show. But we just finished our first audit, which is a major milestone, and we're super excited about.
Okay, my first question
Which,
was gonna be, are you guys an app on another blockchain, or are you your own blockchain?
so we let's talk about from a fundamental perspective.
Sure, sure.
We do not believe in the app chain thesis.
Okay, well, it doesn't seem to be
Full
holding up
stop.
very well right now anyway.
Yeah, I don't believe in it. The team doesn't believe in it. Um, it's being an app chain is running your own hardware.
Right.
It's you know it's like it's paying a huge amount of overhead, and the way to make success in any industry as like an early stage like exploratory project is to be focused, to do the minimum amount, and to just deliver milestones, and to take on all of the overhead to manage your own chain and your own validators and pay the like massive expensive emissions of securing your own chain and things like that doesn't make any sense.
I know, and
So
the emissions from, let's say, the end user's perspective, right? It seems great, right? Because you're like, oh, I'm getting all these free tokens, but aren't you're you're taking value out of the core business. You're almost paying for that user to come use your protocol, your chain.
well, you know, let's think of what you're paying for. You're paying for them. You're paying for IBC for the
Right.
bridge. You're paying for the validators to secure the chain. You're paying for the DevOps engineer on your team that's making sure that the chain is up and running. You know, you're paying for any of the engineers that had to do any custom work for Cosmos SDK. You're paying for, you know, their project manager, their all the overhead of just running an operations, and then you're also paying for people the extra friction for people to bridge stuff over.
Right.
So
So then I
so
guess I get
from a product perspective, it doesn't make a lot of sense.
all right. So then I guess my next question is, you're an app on where?
Yes.
On multiple
So
chains?
okay. So yeah, our goal is to be. We designed the product. So we came from Terra, and Terra had a specific thesis, which like really was built on Cosmos SDK, but wasn't part of like it didn't like market itself as part of the Cosmos community
Right.
per se. Um, and I was very heavily involved with Terra. You know, we're a Delphi Labs project, and you know, Delphi was very early on in Terra. I had like I was part of the LFG when we started building like the second version of UST, which didn't go anywhere because of the crash. So it was we had a front row seat at Terra, and what we saw was that that the idea of creating an ecosystem where capital would prefer to stay within one system was more effective than essentially having just a pure free flow. Everybody manages their own, security, liquidity, bridging, everything like that. So we've looked at the ecosystems on Cosmos that have essentially either migrated from the app chain thesis to the ecosystem thesis, or even just started with the ecosystem thesis. So obviously the biggest chain on Cosmos today is Osmosis.
Right.
And
Right.
it's the like $9 out of $10 that's moving through Cosmos is moving through Osmosis. It's got the greatest liquidity. It's got the best brand. Sunny is like the closest thing like what we have to Vitalik. Assuming like you like Vitalik. I personally like Vitalik. But he is a rock star. So Osmosis, and it's got the best engineers. I think hands down, Osmosis has the best engineers, and I've worked with a bunch of them. So we're very excited to build an Osmosis. Now that being said, we recognize that Cosmos in general is a very different beast than Arbitrum or Solana or just plain vanilla Ethereum or Near or any of these other ecosystems where Cosmos actually allows you to build something for the Cosmos SDK, for the CosmWasm virtual machine within the Cosmos SDK, and then you really could deploy it to all of the chains that support that. So that means deploying on Psi, deploying on Juno, deploying on Celestia, or deploying on Secret, deploying on all these different places, which all have their own different style and flavor. And so we're very excited. I don't know what Chad Griffin is. I see that popped up. Um, but deploying like what we envision, and this is really inspired by Delphi and Mars, is this kind of like hub and spoke or outpost app thesis, which is there's an ecosystem, there's a user base, they're providing economic activity. It's almost like a country, like McDonald's. When my family was Ukrainian, and they immigrated to America like prior to World War II. And so then it wasn't until like 1991 that my father was able to go back, because the Iron Curtain fell. And he went back basically the same time that McDonald's came and deployed in Russia. And so we see these like, it's almost like a franchise of where you can deploy different instances of the same application in different ecosystems, and then have them, like to some extent be independently managed or run,
Yeah.
but at the same time provide economic synergy as a conglomerate, based on the different regions that they deploy
Right.
to. And ultimately, I think that that's one of the most appealing things about Cosmos, is that you can treat them like different sovereign states. You can treat the different Cosmos chains as different sovereign states that the same application could be deployed
Right.
to.
And it's almost like, you don't want to set up your own app chain, but since it's already set up for you, you could just deploy on the existing infrastructure based on where you see fit. Osmosis obviously is a great chain because the liquidity is there. And it also benefits the app chain because now you'll just have more economic activity. And Ethereum's strategy, I don't know if you want to call it a strategy, is to fill up the blocks. I think that's what
Yep.
drove the ETH token price so high. People were willing to pay whatever, 2, 3, $500 to get their transactions in a specific block. And whether you
You don't even what like I look back. So I started trading on Ethereum on the Oasis DEX that MakerDAO came out with in
okay,
like 2018.
that's
So
before my
like
time.
that's what is that? That's
Yeah,
5 years
before
ago.
me.
And like I just look back on these apps. Like what gave me ulcers, like literally what gave me ulcers was these apps where you could put in your wallet address and you could see in today's ether prices how much you paid on gas, going back 5-6 years. And I was just like, oh my gosh, like I just can't tell my
I
wife
gotta
this.
I
This
gotta
is
say
like
the last
it's
3
terrible.
transactions I did on Ethereum were fairly recent, like 6 months ago. I was using Uniswap to buy Sommelier tokens, and the 3 transactions combined were under $1, and I was like, "Wow, this is so great." Because the transaction before that I did, I was supposed to pull money out of a liquidity pool, and the gas fees were like $600, and I was like, "I'll just
Yep.
leave it in the liquidity pool. Why am I gonna?" And I ended up losing like 80% of that. I should have just paid the $600.
Sure.
So, yeah, the I don't think the gas fees were. I think the gas fees were a sign that Ethereum is actually was working the right way, because all if you held Ethereum tokens, you were the beneficiary of people having to buy them to pay gas fees, be- because it was
Well,
competitive
I
to
mean,
get into the block.
it's no different, but it's no different than if the George Washington Bridge to get from Manhattan to New Jersey started charging $700 for a car to come
That's a
out. If like
Yeah,
practically
it's
speaking, like
it's like the
if your
fast
wife
line at Disney.
yeah, if your wife and kids were like in in Fairlawn or Teaneck or wherever, you were going to pay whatever it costs so that you could be with them for the weekend. So like I'm not sure that rent seeking is a model that should be praised, even though it might be an effective
It was
model. And
effective,
I
yeah.
actually yeah,
Your
but
your
it's
analogy is a
never
good one. Your analogy is a good one, because the last time I was on the George Washington Bridge, my kid got car sick on the bridge,
okay.
and I would have paid the $500 to get to a parking
Upstairs
lot.
or downstairs. Yeah.
I think we were on top, and my
Yeah.
"Is everyone okay?" "Yes." 15 minutes later, throwing up in the car, right? In the middle of the
Gosh.
bridge, and it was traffic. I would have paid to get off the bridge and just be in a parking lot with some, with some Lysol spray. But
Yeah.
anyway, I want
Well, there's that gas station when you right get out of the bridge that costs twice as much as everybody else, So it's like,
that's New York.
and yeah, that's New York.
Well,
Yep.
anyway, I want people that were bearing with me on Twitter Spaces. We migrated from Twitter to YouTube. Technically, this is DeFi 101, which is normally a Twitter Space. This is the 9th episode, and we're just going to go into one specific topic, and then we're going to go into basically Levana's uh, niche in the DeFi world as it relates to that topic. If you watch the beginning of this, you got a good background on how Levana, like almost like their philosophy of how they want to operate within Cosmos, coming from Terra, not going to make their own chain, but will definitely benefit from the app chain thesis, be, due to, I guess you described it as outposts, right? You have
Yep.
strategically deploy on, well, osmosis, where the liquidity is, and then
Well, I think that there's an evolution. So just to double tap on the concept of app chain is that you have to look at the life cycle of an early stage company. Now, I come from the background of entrepreneurship. I have had 3 exits previously. I've built companies that have raised tens of millions of dollars, and I've like actually in combined probably well definitely over $100 million, and I've had tens of millions of customers, and there's pattern recognition for that. Is that there are certain needs for an early stage company. And granted, we're talking about protocols. We're not talking about companies within crypto, but a lot of the same mechanics are really critical. Is that when you're very early stage and you don't have product market fit, the thing is that will define success is really focus and really being able to get to market and being able to iterate and experiment and being able to minimize. So why is it that every single startup that you've ever heard of is using cloud computing with Amazon or Google App Chain or any of these other services
as opposed to
that
building it themselves.
yeah, as
Yeah.
opposed to like building servers and
Yeah.
managing servers themselves. And the reason is because all of that is commoditized. Why should they have to deal with Linux boxes and deal with hardware and deal with DevOps and deal with all this other overhead, which could cost them $500,000 a year
Yeah.
or even more than that, when they could just pay $30 a month for Amazon to do it for them? And it's the exact same thing with it's and the reason that they don't do it is not because they don't care about security or they don't care about long-term success or they don't care about economics at scales. It's because they want to just be able to focus on the touch points that interact with their customer base so that they can generate the most amount of cycles to be able to find product market fit as soon as possible. Now, what's the translation of this process within crypto is, how do you build a protocol where you only focus on the most critical things? So you always want to minimize security. So you want to use somebody else's chain, you want to use somebody else's validators, you want to use somebody else's security experts. So you get these auditors, you get an app chain, you get a third-party wallet, and you just focus on the DApp experience. And so that's I think that that's the right approach, and that's what we've gone with. And you also don't want to focus on liquidity or bridging. So that's where we focus within Cosmos of how do we partner with the best in class so that when we launch, we've just got the largest liquidity pools that have the largest user base that will just be able to come to our platform and trade, and then give us feedback on that trading. And that's where Osmosis comes in, and that's where a few other players that are either existing or up and coming really come into play.
Got it. Right. So, all right, let's start with the focus, right? Perps, right? So I'm not an expert trader. I just blindly throw money into my retirement fund. Probably most people, even in DeFi, are familiar with that, right? Oh, I just buy index funds automatically out of my paycheck. It goes into my 401k. I don't have to look at it for 20 years, something like that. But perps are different, right? There's some kind of investment, and unlike options, there's no expiration date. Is that right? Can we compare them,
Yeah.
contrast them with options?
Yes, options are a much more structured vehicle, and personally, I'm a huge fan of options. I built an options protocol, and we deployed it on testnet on Juno. We got about, I think it was 14,000 different wallets to play with it, and then we marketed it to like about, I don't know, maybe like 50 different institutional funds, and there was very little interest for DeFi options. So we could have a whole podcast just on the difference between perpetuals and options, and what the friction is there and what the pros and cons of each approach are. But the just I'll give an analogy as to like what is a perpetual contract,
Yeah.
because it is a
Yeah, we
contract.
need like a working
Um,
definition, and then we could definitely dig into this.
sure. Yep. So a perpetual contract is when you're willing to let's I can give an analogy from a few different angles that I think will be helpful.
Okay, perfect.
So imagine you had one Bitcoin, okay? And you said, you know what, I really think that Bitcoin is going to go to the moon. And I really wish I had 10 Bitcoin. So now, what if today you could um, fix a contract where you could essentially borrow those other 9 Bitcoin, and if Bitcoin went to the moon, you would simply pay back the let's like for I'm going to very much simplify the math, but let's say you could just pay back the fees and the principal price associated with the dollar equivalent at the time that you opened the position. So let's run through the math.
Yep.
Okay. Bitcoin is $10,000. I mean, it's not today, but
No,
again,
this works.
for
This works. Yep.
yep. So Bitcoin's $10,000. I've got one of them. I wish I had 100 of them, or I wish I had 10 of them. So I go to Joe, and I say, Joe, do you have Bitcoin? And you say, no, I don't have Bitcoin, but I'm a market maker, and I could lend you whatever you want. And so then I say, I want to borrow another 9 Bitcoin. So now you go and you lend me another 9 Bitcoin. And so we price that loan at $90. Okay. So now I owe you $90, but I also owe you a continuous fee. Okay. Again, this is not how it works, but we're just simplifying it, explain it like I'm 5.
Perfect.
Um, so now I I owe you those $90, and I owe you let's say that we made an agreement that it's going to cost $10 a day to keep this open. Okay. So I owe you $90,000, and I'm paying, well, not $10, $100 a day. Okay. So I'm paying, so $100 a day to keep that loan of the other $90,000 open. So now, let's say that Bitcoin does really well, and it jumps from $10,000 to $20,000. So now instead of my 1 Bitcoin, which now I made a profit of $10,000 because it doubled in price, but I also made an additional $90,000 profit. So even though I only own $10,000 worth of Bitcoin, and I have a fixed payment of $100 a day, when Bitcoin doubles in price, I made, instead of making $10,000, I made $100,000. Now I might have to pay back that initial price. I might have to pay back that loan for the amount of time that's there. But when I close everything and I go to cash, I didn't just make 2x, I made 10x. And now if I subtract my fees, that could be 9.2x. So I made significantly more money. And what this means is that as a trader, when you play spot, your profits are directly aligned with your liquid capital. So the richer you are, the more money that you can make. But when you work with perpetuals, derivative leverage, your profits are not limited to your liquid capital. Your profits are limited to your conviction.
Meaning
And
what?
that's the
Meaning
main
how
difference.
long you're willing to keep the position open for?
And how confident you are.
Right.
Because you could come and you could say, you know what, today, Joe, I don't want those 90. I'm less confident. Let's scale down that 90 to 30. You know what? I'm super confident today. Let's scale up that 90 to 900.
And that 90
So,
that 90 is what you're paying initially to keep the position open.
yes.
So
Yep,
so I could
exactly.
change my idea of the future value of my bet daily? Like,
Yeah, any on a per block basis.
oh, wow.
Is that is that the more that you are comfortable in paying per block, the more you're exposed to the market.
So
And then obviously you can scale that back.
as this relates to blockchain, there's gonna be a ton of on-chain activity for this, it sounds like. It's not a
It
simple,
is
like, buy and hold c and then, you know
well, so the yes, this is so like let's take Osmosis Dex. Osmosis Dex, if I want to go long Atom token, for example, I might come on January 1st, I buy Atom token. And I hold that the whole year. And then at the end of the year, I'm like, wow, Atom went to the moon. I sell my Atom token. Osmosis Dex made money twice. They made a percentage on the buy sell, the buy, um, the buy percentage. They made money on the sell percentage. And that's it. Whereas with a perpetual Dex, you make money or the Dex itself profits, I should say, every single block, because every position that's open is um, is a combination of it's a continuous buy. there's never a block that goes through on the blockchain which isn't um, collecting some minute fee to a perpetual position, because time is one of the dimensions of perpetual markets, and you pay for time,
Okay.
and that's not true with spot.
Right. Okay. So let me try to like paraphrase a little bit. Um, you're making a leveraged bet, but almost as a replacement for a high amount of collateral, you're going to pay a daily or per block, like a basically that is your collateral. You're going to pay that continuously. There's no expiration and not the same type of structure as with an option. And you could change your actual conviction along the way based on real time market conditions.
Now, not every perpetual allows you to change it.
Oh,
That was
okay.
something that
Okay.
we added at Levana, is that because it was one of the pain points that we as traders had.
Okay.
I don't know if you know my background. I was part of a liquid hedge fund for years, and I was head of research. And one of the big pain points that I had was that we had perpetuals or future exposure to various markets, and then we got a report or we saw a tweet and we wanted to change it and we were stuck, and that always pissed me off. So part of what we looked at was, how can we make it that this could be updated all the time so that you could really optimize your fees. And like what Chad just wrote is that couldn't get pricey. So there were a few things that went into minimizing fees on a perpetual swap. One of the things that Levana aims to be different is to have lower fees than all the other perpetual swap platforms. So one of the ways that we do this is by greater level of customization. So you can customize your take profits. You can customize your leverage position, and you can customize them throughout the entire life cycle of the position. So that means you can really optimize the amount of fees that you're paying, much more so than other positions. And you're not either forced to close it and reopen another position, which usually in most perpetuals, the highest fees that you pay are on the opening and the closing. And so in order just to be able to minimize that, um, there's a lot more functionality that was really provided in like super simple, just like slider menus that you can slide up and down positions within Levana.
Okay. I was going to ask, like, definitely one of the next questions was going to be someone like me. I vaguely understand the traditional markets. I probably understand DeFi better than the traditional markets. Am I going to be able to, you know, spend a little bit of time and then get proficient with this? What is it going to look like to the end user? Levana's
Well,
platform.
there's a few fundamental differences that. So one of them was, and I'm not going to get into the math because I don't think that's so important.
That's fine.
But
It's
one of
very
them
early
was,
in the morning here anyway for me to do math.
sure, sure. So one of them was how do we make the user interface super simple? So you just open a position. It's peer versus pool, which means like you don't have to worry about an order book. You can, if you want to set a limit order and say, please open a position when Atom hits $9, or so when Bitcoin hits 27,000. So you can do that. You can have the fine control that you would need for very professional trading, but the user interface to be very simple. So you can come in and just use sliders. Obviously, you could type in minute details, but you can just use sliders to slide up and down various elements of the position. And then this was something that was very important to some of our analysts and traders and some of our beta testers. We've had well over 10,000 beta testers, and we've been on beta with this product. We initially launched the beta in September on Juno. And so we've had many interviews, like hundreds of interviews with traders, really getting into the pain points with the things they understood, they didn't understand. I would go so far to say is we're probably the most battle tested user experience of anything in the Cosmos space. and that just, and I think that if anybody comes and they play with our beta and they follow our tutorials, which are available on our blog on Medium, or you can find them pinned on our Telegram channel, which you can link to through our Twitter page, is that you'll feel the refinement. And one of the things that really came out of all of this research and all of this revision is that everything is priced in USD. Because at the end of the day, the thing that people care about, even if they're trading Bitcoin or they're trading Ethereum, they want to know, how much did I pay in fees in USD? And
Right.
that's not a really that's not a simple thing to calculate, because if you're paying your margin, like imagine you collateralize a position using wrap Bitcoin or using Atom or using Ethereum, and then you are paying fees based on the percentage leverage of that same notional crypto asset, which is volatile in of itself. And then you had the ability to scale up and scale down on a per block basis, to be able to come to a history page and just answer the simple question of, like, did I pay $100 in fees? Did I pay $50 in fees? Did I pay $70 in fees? There's a lot of math that goes into that. And that kind of math can be really expensive to calculate on the blockchain. So that was a lot of the optimizations that even went into the background, was just answering the simple question of, like, how much did I pay in fees? And we did a really good job at that.
All right. So I'm like I said, I consider myself like beginner to intermediate. It sounds like you guys took a lot of input from people who design nice user experiences for people like me. The fees will be calculated in USD, but I'm gonna have Atom in my wallet. I'll have Juno, you know, um, maybe some Axelar assets. Can you walk through a simple example of, step by step, how I'm going to interact with this? Let's say I have one Atom in my in my wallet, and I'm long Atom. It's at $10. What am I going to exactly have to do on the platform to interact here with Levana?
So let's say you're bullish on Atom
Yeah.
and bullish on Atom. So you go to the Levana exchange. So today we're in beta, we're on testnet. So it doesn't cost anything. There's a faucet. So you come to the website, you connect your Kepler wallet. Then you collateralize your position. So you say, I want to open, a one Atom position, or you could denominate it in dollars. So you would say, like, what is it? It's 10, $12 for an Atom. And then you would decide, what leverage do I want to apply to this collateral? So you slide a slider, or you type in a number, and you'd say, I want to be 15%. Then you could say, I want to just buy it right now, which is a market order. Or you might click that you want to do a limit order, which you say, wait until Atom drops by 50 cents. I want to do it at, right now Atom is at $12. When it hits 11.50, open this position. So those are the options that you have, very simple in the user interface. Then you might say, you know what? And not only that, I don't want to lose sleep over this position. So in order to not lose sleep over a leverage position, now granted, you're talking to somebody that lost probably 10 Bitcoin on BitMEX over the years. Like, now granted, Bitcoin was trading at like, 800 bucks, 900 bucks, $1,000. Like, it was a totally different world at that point. Maybe it was like 2,000 bucks, whatever it was. But there's a lot of Bitcoin that I've paid to the gods of BitMEX.
Gods.
And and so again, we're learning from these mistakes of early traders, because I was a terrible trader, back in 2017. I'm still a terrible trader, but at least I'm more conscious of the fact. So you come and you open up this position, um, and you might say, there's two things. I want a lower bounds and I want an upper bounds. So the lower bounds is called the stop loss. So you might come and say, if Adam hits $11, meaning that the trade went against me because I opened it up at 11.50. So if it hits $11, I don't want to lose my shirt. Automatically close my position. And if it hits $14, meaning I just made a boatload of cash, close my position in the profits. So when you come on, you have the ability to set a few things. First thing you set is I want to put in one atom. Second thing you said is open my position when it's at 11.50. Third thing you set is protect me if it hits $11 because I was wrong.
Right.
Third thing is help me make money and close my position when it hits $14. Now, once you've said all of that, you're going to see exactly how much fees, expressed in dollars that you're expected to pay on a per day basis to keep this position open. You agree to it. And now you open the position, everything is on chain. There's no off chain order book. There's no off chain sequencing. There's no, behind the deal front running or MEV associated, with like an order book that's very popular with these like layer twos that you might find. So everything sits on chain, and then you just set it and forget it. And then if you're in the money and the position moves uh, in the direction you expected, you'll take profits and you win. If the market goes against you and you're afraid of losing your shirt, so then you were protected. Yes, and Mad Cat, USD is a baseline for fees to be priced in. Now, technically, everything under the hood is being priced in the notional asset. But the way that it's being explained to you, because we don't use in the initial version, in this version of Levana, we don't use stablecoins, and that's because of post trauma from Terra. So everything like you're long, you're short, you're bullish, you're bearish, you're super degen, high leverage, you're low leverage. The system is only touching your crypto assets. There's no USDC, there's no Tether, there's no Axelar USDC in the asset. So we're using the Pith Oracle. So everything is compared to US dollar, but we're not actually using any stablecoin. Now we've got a version of the system that is synthetic assets. Thank you, MB. Appreciate that. So we're expecting to have a future version which does have synthetic assets and does use stablecoins, but that's not the innovation that we wanted to bring to the market. That's not the launch product.
Got it. Okay. All right. So you guys are in beta now. It's being tested. Uh, do you have a roadmap for when this will be opened up to public? When it will go live? Is it Q3, Q4? Is it
So
soon?
we actually just finished our first audit with
Oh, okay.
Bio. They spent almost 6 weeks diligently reviewing the code, and they caught some nasty bugs,
Okay.
like really nasty bugs. They caught a bug where using a certain exploit, one user would be able to lower the leverage position on another user's account or another user's position. And this was like, it was like, I don't know if anybody can even see the video, but it was like scratching your right ear with your left foot. It was like how they figured out how to do it. And it was a pretty nasty bug. Now you could say like, okay, well, we'll become a Borg instead of a DAO. So we are a Delphi product, and the Borg analysis is super. It's a subset of how to build a DAO. I think it's outside of the scope of this conversation.
Maybe I'm not
The
familiar with what is Borg.
so okay. The so DAOs have been through a number of different iterations. So
Oh yeah.
DAOs initially were created as non-registered uh, uh, user uh, conglomerates. I don't even know what the official term is, but essentially, like, let's say that you and I just on the New Jersey Turnpike made a lemonade stand, okay? And we had a shake hand agreement that we were partners on this. And then, somebody comes and gets distracted, God forbid, by our lemonade stand and crashes their car. So then they sue us. So obviously there was no legal entity associated with our lemonade stand. Um, and so when it comes to like the court hearing, so the court hearing isn't, dealing with like Jonathan and Joe's Lemonade Co. It's a non-legal entity. So there's plenty of legal infrastructure for non-legal entities, and there's a whole process within U.S. jurisdiction as how you deal with non-legal entities. So that has a problem because there's no limited liability. There's no clarification as to like what part of like what independent or individual um uh ownership or responsibility Joe has versus Jonathan has. It's kind of all up in the air. And then it's like, well, also what happened, like if we're defining ownership by like token ownership, so then is it at the time of the hearing? Is it the time of the accident? Is it the time of the previous sale of the lemonade? Is it at the time of the investigation by like there's all this ambiguity. So what the next generation, that was like back in 2018. uh, so then the next generation off of that was, well, let's make legal wrappers around DAOs. And then so that's how you get from Aaron Wright, who was the legal counsel at the Ethereum Foundation, which oversaw the creation of the original DAO, which had to hack in 2016. So then he created a firm called Open Law, which then evolved into the LAO, the legal DAO, back in 2019. I was a founding member of that at the time. Then we had Metacartel, which was part of like of the which I was also a founding member of, which came out of Berlin back like in 2017 and 18, with Peter Pan and a few others, and Amin Salamoni. And then we had Venture DAO, which was the derivation of that, which then Gabriel from Delphi was the legal counsel that helped kick that off. And I was a founding member of that as well. So I like got to watch a lot of this stuff really from a legal perspective evolve. Um, and so all of these evolutions have always tried to answer the question of how is traditional finance supposed to interact from a business entity or exposure point with all of this stuff that like there's no KYC
Right.
in many cases. There's no like you don't even know what country these people are in.
And then
Like
if you throw a multi-sig wallet into the equation, I think the DAOs can create more problems than they fix. I see DAOs as like potentially a way to organize DeFi, but right now, just calling something a DAO doesn't automatically make it good or make it helpful. So I think DAOs need to go through even more iterations, and the jurisdictions. Some states in the United States already recognize DAOs um, as almost like an offshoot of an LLC, or as like a way
Exactly.
to
So
structure
that is
LLC.
the legal,
Yeah,
yeah, so that's the legal structure that I was referencing. So you could have a Panama legal structure around it. You could have a Seychelles. You could have Singapore. You could have Delaware or Wyoming. There's a few like predominant legal infrastructures that sit in the market today, and they each have their pros and their cons. And at the end of the day, all of them have very negative consequences with the current infrastructure at the SEC. Like I've been in this space for 6 years. I've never seen. I'm continued to be shocked um, at the missed opportunities within American legislature. Like there's a joke in like I live in the Middle East, and in the Middle East has been turmoil. We grow up saying like peace in the Middle East, and there's always literally my neighbors have had you know did like 4 or 5 different governments and different currencies since I was in high school. And there's like almost a joke which says like there's regions in the Middle East where they will never miss an opportunity to miss an opportunity. And what that means is that like anytime that you have the potential to create growth, and then based on bureaucracy you choose the worst option that was available to you, and then you just do that over and over again, that's what I feel like interacting or viewing the legislation within the current regime within America, for the past 3 or 4 years, is that America has never missed an opportunity to miss an opportunity within crypto.
Oh, it's hard to argue that, and I have friends in the traditional finance world who were very optimistic a couple of years ago because they have, they're doing research, like internal research. They're starting to put together internal documents ready to hand high net worth clients. Hey, these are the products that can get you into crypto. This is what we're going to offer. And then within the last year, year and a half, the conversation has just turned into, I guess we're going to ship innovation to Hong Kong, or I guess we're going to ship innovation
Yeah,
elsewhere.
that's exactly what it's come to.
There
I
it is.
like I sat in the room. I can't tell you which like endowment fund and which university and like which state office like I'm bound by various NDAs, but like I have sat in the room with literally tens of billions of dollars that wanted to deploy into American vehicles within the space of crypto, and that now all of that money is going to leave America because the people are bullish on crypto, but there's no way to do it and then to pay fees to American companies.
Yeah.
And that's the stupidest thing
Yeah.
is like,
And it's not even, you know, we live in the current time. So this is the issue that we see. But even other administrations, for no good reason has done this with other technology as well. Like I remember stem cells being a big issue. Um,
yep,
that eventually what's going to happen is that citizens of your country will have to pay a premium to import this tech when it becomes basically a consumer product, and you will not have the benefit of having the leaders in the industry based in your country, um, generating jobs, tax revenue, and further collaboration and innovation within the country. It's really, it, I feel like this is just like black and white evidence that there's just some bribe system in place that we'll never see, and it doesn't make any sense to snuff out brand new industries before they even get off the ground. Um, it's just it.
I don't know. I have two main theses on this, which is one is that it's subterfuge, like what you described, that it's just pure corruption.
I
And
think
then
so
the
because
other,
a lot of the politicians, they could walk away at any time and they choose not to. So
yep,
like it's not like they're basically getting paid like the salary of like a cop who does a whole bunch of overtime, right?
yeah,
They're
yeah,
not making.
it's that corrupt beat.
I Yeah,
You know,
I work in the schools. They make about what like a principal makes or an assistant principal makes. Like they're not killing it salary.
well, I mean, not Gary Gensler. Gary Gensler is worth like over $100 million. So where did that money come from? That's a great
And why
question.
work at that point, right? So there's got to be some
Yeah,
other perks of the job. But anyway, I want to let's like recap where we're at with Levana,
sure,
right? And
sure.
I usually take notes during this. It's been harder for me to take notes on YouTube compared to Twitter Spaces. But you tell me if I've got the gist of at least some of the points. So, number one takeaway for me is um, Levana. You guys are an early stage protocol company. You're going to deploy as outposts, starting with osmosis versus become an app chain on your own. Number two, Levana will have features that don't necessarily exist in the traditional markets, like what you were saying with the being able to change the conviction of a position on a dime. Uh, User interface will be a focus, which is a nice, refreshing idea if you've ever tried to use any DeFi, um, outside of like a few select products. And then,
And please, if you're watching, please use the beta and give us feedback, because the beta,
oh, okay,
if you were using the beta in September, it sucked. Like objectively, it was terrible compared to what we have today. And the only reason that it's gotten better is because of people like you that gave us feedback.
okay. And then the next thing for users is that fees are going to be priced in US dollars. They'll be right there for you to figure out what you've been paying,
And not
different
only fees, but profits and losses,
profits and losses.
including including history with exports, so that you can go to your tax, you can go to your accountant and you can pay your taxes. Like we want this to be something that has a seat within the institutional world, because at the end at the end of the day, 95% of the capital here is institutional capital. And so building a product that's simple enough for the Joe on the street,
Mhm.
not to reference you, but just the Joe on the street, and then robust enough to appeal to the institutional hedge fund. That's the very complicated and very challenging spread that we're trying to accomplish.
And I guess my own question is to be able to bridge those two, I don't want to say competing interests, but just different demographics
It's
of
it's
customer.
it's absolutely different. The
Yeah.
retail wants fun and entertaining and cool and narrative and playful, and institutional wants dry and mechanical and like the like APIs and programmable, and they're very challenging things to bridge.
But you think the osmosis chain is the place, bar none, to start this.
I think that Osmosis has the highest lead. We're very impressed with the Say network. We're very impressed with a few of the other networks that are coming to market, and we're excited to be where liquidity is and
Yeah,
be
I
where
mean,
opportunity is.
perfect answer because in the bear market, I span a couple different ecosystems. It's like, oh, TVL doesn't matter. TVL doesn't matter. It's like it kind of matters because that's like the money that's going to get used to facilitate trades to end up being collateral for loans and different protocols. All right, I guess I got one more question. I probably should have asked in the beginning because people will DM me about this. You're deploying on osmosis. Is there a need for you to have your own token? Will there be a token? How is that going to shake out?
Yes, there will be a token. There will be airdrops. There will be rewards for beta. There will be rewards for our existing community. Those are things that are very important to us. We had the most successful GameFi on Terra back a year and a half ago. And we're excited to bring that community with us through the form of airdrops and rewards to educate them on the power of DeFi and perpetual swap. We have, we will have, you know, the onboarding experiences to teach new people how to interact with perpetuals through beta programs. We will have VIP airdrops. We will have a lock drop where you can provide liquidity to our new exchange, whether that's on Osmosis or whether that's on Celestia or Say or any other chain. Where we need liquidity, we will have opportunities where you will be able to lock up capital and then be adequately or you know heavily compensated for that through airdrops or emissions of the Levana token, which is a governance token, which will have significant utility within the application in terms of being able to be used to leverage premium memberships, which will be expressed as NFTs through our application or through governance this interaction through helping to vote on what's the future of the platform, and we're excited to really grow and mature with the community as a whole.
I actually like to hear that NFTs are going to be integrated into DeFi, especially governance. I think that's a massive opportunity versus strictly relying on fungible tokens that usually have
I
multiple
agree.
uses and they don't do any one really well right now in Cosmos anyway. Or, I mean, a lot of platforms, those I don't layer two tokens or project tokens, they get pulled in a lot of different directions. So that beta you're talking about is accessible now. I would love to be able to test
Yeah,
it out.
beta.levana.finance. So that's how you
Beta.levana.finance. All right.
yeah, beta.levana.finance. And there you can sign up for upcoming trading competitions with your email. You can contact our customer support if you have any. Yep,
All right. Well,
beta.levana.finance.
is there
So
anything else you want to send us off with to summarize?
just to say that it's leverage is if you look in the traditional markets, for every $1 that is spent on a spot exchange to like buy Tesla stock or Bed Bath and Beyond or Apple or whatever, there's roughly $45 that are spent in the derivatives or leverage market. And we anticipate that that same ratio is going to play true in crypto once things like user experience, scalability, economics are addressed. And it's our intention to address those things. We want a we want a cost-effective platform. We want a platform that can scale across multiple chains, that can address the usability issues and can address the fee issues to allow for, we look like on a daily basis, like let's just take osmosis for example. There's roughly $200 million traded every day on, oh wait, no, that's not true. There's roughly $200 million of liquidity on osmosis that sits. I'm going to pull up let's see the stats. um, app. I'm just real time right now looking. I went to app.osmosis.zone. I go to stats. It's info.osmosis.zone. So in the last 24 hours, there was $4 million. Yeah, not and then if I look, that's so far, and then I go back like a day, 2 days, over $10 million of daily trading volume on osmosis. Now, if we just run the numbers, 40, 45 times that, okay, with a more lucrative fee model. So instead of there being $10 million of daily trading volume, so that should be $400 million. And with a more effective fee capturing model, so that means that what Levana comes to bring to the table is something that we're talking about very realistically, um, can be earning like orders of magnitude more fees than the fees that you see collected on osmosis without being egregious to the end user, because they're getting what they pay for and it's very competitive to what they can find in other
Right.
markets. Again, it's like, you have like our back of the envelope price calculations, and it's not hard to calculate this. um, is that somebody that put in one Bitcoin as collateral and then did 10x volume, so that you have 300 users a day like that, the protocol is already pulling in over $1 million monthly in fees.
Yeah.
That's not a lot of
No, it's not.
users.
And
And
DeFi in general across the cosmos, they have trouble capturing value. Um, the, the the gas fees are so low. You have validators running at a loss for months, maybe years. And I definitely see a trend where the newer protocols, the newer chains are paying very close attention to fee models, revenue stream being used to control um, to offset sell pressure on the tokens, let's say, that are integral to the platform. So it's good to hear you talk about this, and I would love to test out this. I'll definitely play around with this because I'm very interested in what this looks like when you could have actual microtransactions all throughout the process,
Yep.
and the fees are so low in Cosmos. It's definitely a better place to deploy than you know Ethereum, right? Because you can't pull up.
Anything else? You see here, Madcaps Laugh is my Twitter handle, and Levana underscore protocol is our official handle. And I recently just went to ETH gas station for the first time in like 6 months, and I just looked at the fees for Ethereum or for on Ethereum for Uniswap version 2. You want to guess? Just Joe, just guess. How much did users pay in rent to Ethereum to use Uniswap V2 for the past month?
For the
Throw out a
past
number.
month. You're
Yep,
you're
just the past
talking
month.
you're
How
talking
much
gas fees to do
did
simple
Uniswap?
swaps. Uh,
Yeah, just to pay. I mean, it's essentially
you
rent. It's rent and and a shakedown mafia security budget so we don't burn down your shop. So how much did they pay to Ethereum? Just
I
guess.
mean, it's got to be $1 million, right? It's got to be in the.
$23 million.
Ah,
$23 million that didn't benefit any uni
no,
holder, that didn't benefit any swap holder, that didn't benefit the devs of Uniswap. It just sat there. They paid shakedown fee, and you know what? Most of that got burned because of what is it, EIP 1559. And so that money just essentially just disappeared or got paid to stakers on the Ethereum, but it didn't make Uniswap
right. Well,
better.
that's the thing.
And that's
Ethereum is structured so that those tokens that are associated with the individual dApps, they get bypassed in terms of value, and that just goes right to people that are just passively holding ETH. And I really think
yep.
that that is one model that works that way. But now,
But it doesn't scale. It's not it doesn't I don't think we're here in crypto to invent new business models. I think that if you go back and you look at the merchants from like the 1400s that were, when what's his name, when Newton was funding like the like the like the for the ships to go and bring spices from India, like they had stocks, they had options, they had derivatives, they had like short markets, like a lot of the what we feel are newfangled financial models. They go back hundreds of years and they're super battle tested. We're not here to just like try and reinvent or make fictitious, which usually whenever you have somebody inventing a new business model, 9 out of 10 times or 99 out of 10 times, all it is a complicated Ponzi that just hides the Ponzi. That you know, so we need to make businesses that make profits, that collect those profits, and then funnel the profits to the right places through decentralized
I got to
governance.
say, this is the
And
second video in a row. People that rewatch this, second video in a row where someone's actually talking about profits, revenue, business. Uh, my previous 150 videos, it's APR, APR, APR. But what? Now we've been here for a year where the prices don't cooperate. The APRs mean nothing. If you give me 100% APR, but the token dumps 90% in a month, how many years will it take for me to get back to my original position, even with 100% APR, right?
no, and the thing is that it's hard because there's only two areas within crypto that have product market fit that can actually produce revenue. One of them is gaming
Mm.
because people pay to play
Yeah.
games.
And entertainment.
And then the
Yeah.
other, yeah, entertainment. People will pay for entertainment. And then the
Gambling.
second is, yeah, is I don't want to use that term. I think that's a loaded term, but speculating
Oh,
on
okay.
markets. And so you either need to decide, do you want to be a video game where people will pay for video game assets, or do you want to be a market that allows people to speculate? And the best is if you can figure out how to combine those
Oh
two.
yeah.
But you know, but that's I think a longer term vision, and I don't think that we're at the point in the market where we can actualize that. But I think we will get to that point. But you have to, at the end of the day, you have to recognize you're a zero sum game. You don't have a money printer, and if you think you have a money printer, then you're producing a
All right.
Ponzi.
Well, you're speaking my language here. It's nice to hear the word profit on the channel. And business. Wow, I don't think anyone's ever said business, so that's good. Pretty soon, maybe on the next episode, we'll say the word product or service. That would be cool.
Sure.
So anyway, I really appreciate you coming on and being flexible. This was supposed to be on Twitter, but it's on YouTube. I don't like doing live streams. I like to be able to edit out all my stuttering and my confusion, but everyone got to see it raw right now, how it works. And yeah, I'll definitely check out that beta. I'll share that link along with this one. The advantage to YouTube, though, this will live a lot longer than a Twitter space, so people will be able to, rediscover this again as the everything rolls out, live official versions of apps. Um, Thanks so much, man. I really appreciate the flexibility and the info.
I I really appreciate it as well, and I look forward to hearing your feedback on the product. And
If
and
I
as we
could
get
use it,
closer to
if I
launch,
could use it, the UX is a grand slam. Put it that way.
awesome, awesome. So I look forward. So I'm gonna hold you up to that, and I'm gonna ping you in a couple months, just to hear more about it. And look, guys, if you're watching this, my DMs are open. Madcaps Laugh, Levana underscore protocols, DMs are open. Like I will literally hop on a phone call with anybody that asks for it. So if you have anything to share, um, please just ping me and let's build something awesome
Cool.
together.
And if you're going to put this into a blog, if you want some like excerpts from this video, just reach out to me. I could basically share the original with you. I could share the original video with you, Jonathan. If your team wants to splice it up for any promo stuff, just shoot me a DM. I'll be able to do that.
Awesome. I appreciate
All
that.
right.
Yep.
Well, thanks. And a
All
lot of
right.
people, a lot
Thanks,
of people
guys.
stuck it out in the chat the whole time. That's really nice, of you guys
Yeah.
to support and watch. So thanks for that.
All right. Have a wonderful weekend, and I look forward to continuing the conversation.